Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into LKQ Corporation's latest proxy statement. Think of it as their instruction manual for the annual shareholder meeting where big decisions are made. This one has a few surprises, including some board member exits and new additions. It's like a game of corporate musical chairs. LKQ wants you, a shareholder, to vote on some important stuff. Think of it like a school election, but with potentially billions of dollars at stake. They're asking you to pick directors, say yes to their accounting firm, and give a thumbs up or down on how they pay their top executives. First up, there's the official stuff like that. This is a real document and not some prank. Also, it's important to note that they are doing things virtually, so it's all online. The main event is the annual meeting where shareholders get to vote. It is happening on May 7, 2025. Mark your calendars. And just in case something comes up, there is always room to postpone it. If you are interested in who you are voting for or their corporate code of ethics, check out their website. The proxy statement also talks about LKQ's corporate governance. This is how the company organizes itself to make sure things are done ethically and in the best interests of the shareholders, you. They highlight things like board evaluations and director independence, which is good. So what does LKQ actually do? They're in the business of being the leading global value-added and sustainable distributor of vehicle parts and accessories, which basically means they sell car parts. Now let's meet the nominees for the board of directors. These are the people you're voting for to help steer the company. We have Patrick Berard, who used to be the CEO of Rexel Group, a big electrical products company. Then there's Andrew Clark, who knows a thing or two about logistics and finance. Meg DeVito brings technology expertise to the table, especially in the Internet of Things world. Sue Goff has served as founder and president of Excelsior Advisors LLC, a retail consulting and advisory firm since 2014. She's an expert in that realm. Justin Jude became president and chief executive officer in July 2024. He has been with LKQ for a long time, so he knows the company inside and out. John Mendel spent years at Honda, so he knows the auto industry well. James Metcalf was the CEO of Cornerstone Building Brands and brings leadership experience. Jody Miller has experience in both business and government. Michael Powell has spent his professional career working in Progressive Corporation in claims, so he brings unique and relevant industry expertise. Gagan Subramanian is a professor at Harvard and knows a lot about corporate law. Now, for some departures, Dominic Zarcone is stacking down. It's like a quarterback retiring after a long season. And Blythe McGarvey has decided not to run for re-election. It's important that most of the directors are independent, meaning they don't have a vested interest in the company other than doing what's best for the shareholders. To make sure the directors are aligned with the shareholders, they're expected to own a certain amount of company stock. That makes them care about the stock price, just like you. Time to talk about the accountants. The shareholders are being asked to approve Deloitte & Touche as the company's independent registered public accounting firm. Think of them as the people who check LKQ's math to make sure everything adds up. Deloitte makes a lot of money. In 2024, they made $10,582,780. Most of it was audit fees, but some was also tax fees. Next up is the executive compensation vote. You as a shareholder get to give an advisory vote on whether you think the top executives are being paid fairly. Here is a summary of compensation to give you an idea of who gets paid what. These tables are super dense with numbers, but pay special attention to the total column in the... You'll see the total compensation for the top executives like Justin Jude and Rick Dalloway. Justin Jude had a total compensation of $4,500, odd Y was $2,000, Rick Dalloway was $2,000,938. The board wants to make sure that they are paying what is normal to retain talent. So they do studies and compare themselves against other similar companies like AutoZone and Genuine Parts Company. What do these guys get paid in? They get paid in salary, bonus, and stock. It's important to note that the amount of the stock and bonus is highly variable, which means they are incentivized to work harder. The compensation programs are designed to reward achieving EBITDA earnings before interest, taxes, depreciation, and amortization, revenue growth, and return on invested capital. These are all key indicators of a company's financial health. To reward the executives for the long term, a portion of their compensation comes from a cash long-term incentive program, which can be increased or decreased by up to 10% based on sustainability goals. It's all granted at a set date too, nothing too random here. Also, there is a whole thing about insider trading to make sure that nothing's fishy goes on. In the event of a oopsie, most of these boys will get good parachutes to go out on. The pay ratio is how much more the CEO makes than the median employee. In LKQ's case, it's 101 to 1 to 1. In 2024, the average LKQ employee made $44,406 for reference. Also, how does that compare to the profits of the company? Well, their net income was $693 million. So on one hand, it seems like they are making plenty. However, their peers that make roughly 110x are looking at the overall numbers. They may have to change things up to catch up to some of the companies they compare themselves to. Oh, there is one more proposal. An advisory vote to give shareholders the ability to call for a special meeting at a 10% ownership threshold. The company doesn't recommend anything on it though. Now let's step back and look at the bigger picture. LKQ seems to be navigating the ever-changing automotive parts world reasonably well. Their diverse board is full of relevant experience and expertise. However, they aren't particularly crushing it. Looking ahead, LKQ faces the same challenges as any company in the auto parts industry, namely a transition into electric vehicles and other high-tech parts. The company seems to be okay if the car market doesn't boom or skyrocket anytime soon. Ultimately, LKQ Corporation is a solid company in a necessary industry. Their numbers are okay, but maybe better in comparison to their competitors. Make sure to subscribe, like, and comment below, and we will look at other proxy statements.